This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is about Berkshire Hathaway, 7 key points. So Berkshire Hathaway and Warren Buffett reported results for 2022 recently, and here's a number of things that come out of that, and it's fascinating to watch. So overall, I'll go through 7 quick points. Their operating earnings fell during the fourth quarter by nearly 8% to $6.7 billion. So the overall operating earnings, and you have to remember, they, meaning Berkshire Hathaway, focuses so much on their operating earnings. This would be very much like a private equity fee focusing on their management fees or how their companies are doing versus the actual mark-to-market values of the company. So they focus on their operating earnings and how those things are doing. So overall, down 8% in the fourth quarter, but overall still a pretty good year. Second, for the year, operating earnings were up by more than 12% to nearly $30 billion, $31 billion. And that's, again, a good sign for the overall health of the companies they're holding. And we'll talk about in a moment what are those top companies they're holding, including Apple and Coke and Bank of America and American Express and so forth. But the actual health of the company and their operating earnings are very tied together. So we'll talk about that in a second. Third, the firm, Berkshire Hathaway, did $8 billion in buybacks last year. The basic perspective of Warren Buffett has always been, if we view our stock as undervalued, we're going to buy it back because at a moment in time it's undervalued and it's a good deal for us. And we're sitting on so much cash, better to invest in our own company than other companies. So he's a huge fan of using buybacks to buy back shares when he believes the shares are undervalued. The buybacks themselves have become a political hot topic as they've been sort of demonized by Wall Street as not reinvesting in the company or demonized by DC, not by Wall Street, as a sign of not reinvesting in the companies. Warren Buffett recently said this thought that buybacks are bad is idiocy, economic illiteracy, and idiocy, and part of silver-tongued politicians. It's probably, for someone who was a supporter, as Warren Buffett was, of Hillary Clinton and Joe Biden, it's probably the sharpest thug he's taken yet to the Democratic establishment perspective on this concept of buybacks and so forth. Fascinating to watch. Fourth, cash on hand. Berkshire Hathaway is sitting on $128 billion in cash on hand, which is an incredible amount. And so they're poised to put money to work, but they got to find deals they want to do so. Fifth, overall earnings, which is this mix of their operating earnings plus their investment results, were down a loss of $23 billion. And this really reflects the value of their different investments. So if Apple stock price went down, Coca-Cola stock price went down, if the other company stock price went down, that's reflected in their investment losses, which gives them an overall loss for the year, even though the operating earnings of their companies that dial up to them did well. The actual stock market values of their big investments did poorly. Thus, they have an overall loss of $23 billion. Now, Warren Buffett always says, look at our operating earnings for a long-term sense of the strength of our conglomeration of companies, not to our investment results, which could change year in, year out based on multiples and other types of things. And he's probably largely right. The largest holdings of Berkshire Hathaway are, in order, Apple, Bank of America, Chevron, Coca-Cola, and American Express. Finally, last, seventh, Berkshire Hathaway is the 5th largest capital company in the United States. The other 4, Apple number 1, Microsoft number 2, Alphabet, Google number 3, and Amazon number 4. So Berkshire Hathaway is 5th, and it's really a conglomerate by all practical purposes, or an equity holding company, whatever you want to call it. United Healthcare, for those that follow healthcare, is number 9th in the market cap companies. And again, those are sort of 7 quick notes on Berkshire Hathaway. At the end of the day, Berkshire Hathaway rode through 2022, which was a very much down year for the stock market, pretty well. And it's I think they looked at the fact that their operating earnings held up is a very good sign as to where Berkshire Hathaway and its conglomeration of companies are at. Thank you for listening to the Becker Private Equity Business Podcast, and fascinating to watch. I wish there's an investor. Fascinating to watch Berkshire Hathaway and what they accomplished. Thank you for listening.